Hi everybody, this is TJ with Netpicks.com. I just recently did a video outlining the three essential keys to determining if a chart is worth trading, so I thought I would do a follow-up video and explore a specific chart, in this case the Russell eMini. So the question being, is the Russell eMini a market worth day trading, and if so, what chart? So let's first review the three keys that we have to answer yes to, the three essential questions, I should say. Whenever we're going to assess a chart to see if it's worth trading, we want to be able to answer yes to all three of these questions. Are there enough trades in our session? Are the trades the proper size? And what I mean by that is the risk acceptable? Can we afford it? If we're putting on more than 2% of our capital on any given trade, then it's probably a chart that we should not consider. We should look for a chart that we could actually afford. And then the final question, can I quit positive a majority of the time with minimal trading? The goal here is to be able to quit each session with a positive result so that we can grow our account on a steady basis. And then over time, utilize the power of compounding and just increase our position size as we grow our account. Hopefully everyone can see the sense in that. There's nothing worse than giving your hard-earned gains back to the market. So we have to build in some sort of safeguard that allows us to keep our profits and grow our account steadily and surely. We also have to establish some simple rules. For example, when are we going to start? What's our start time? And how do we know when to quit? What's our quitting time? We could either have a hard stopping time or X number of trades or a specific goal. If we reach it, then we quit within a certain amount of trades. That's the one I like. We call that the power of quitting. And then other simple rules that we need to follow. So for the case of this video, we're going to use the new Spotlight Power Trader strategy that I've been developing. And we're going to do simple things, for example, like adjust our entries and stops off of tens. Okay, so basically a round number of 1415.00, 1416.00. If we get within one tick of that, then we'll adjust one tick beyond it. So when we look at some examples, you'll see how that works. And that will help us avoid some bad trades. All right, so this is today's session. It's still going. It's a live session. You can see quite a bit of trades. There's some winning trades. Actually, it looks like most of these trades are winners, but it's also late in the morning. So the first rule that we're going to apply is that we're going to start looking for trades right when the market opens at 9:30 New York time. Okay, so let's go back and see how today would have done. This is just a random session. I like to go back to the beginning and just kind of click through and think through what happens next. So here we are at 9:13. That's too early. This one here is at 9:29 and 46 seconds. And then it does hit the entry and it's 9:30. But if you look at how fast it moves down, I mean, literally 5 seconds after the start of the session, it's already passing through the entry. And you could see that that was a partial winner, but we're not going to count that because it probably moved too fast. We're using an 8-tick momentum range bar for this example, and we want to determine if this chart is worth day trading the Russell eMini. So we'll look at a few sessions here. So then the first trade is a long trade, and that's going to be a losing trade. And losing trades do happen, and that loses 19 ticks. Then we have this short trade right here, and you'll notice that the entry is right at 1418. And remember what I said, if we're on a round number, we're going to make a 1-tick adjustment beyond that. So this entry would be 1417.9. Okay, so it's just one of the little rules we've established, so we want to make sure that we account for that as we're looking through these examples. And this is a good example as to why we make that adjustment because it avoids getting short here, and instead we're going to get long right here at 1419.2. All right, so we have one losing trade of 19 ticks. We get long right here, and it comes up and it hits its target 2, which is good for 13 ticks. So if you're trading a single position, you're still not quite positive, assuming you're getting out at the target, the second target. If you're trading multiple positions, you might decide to trail a second position. So that would be 19 times 2 would be minus 38 would be what this trade lost, and then you'd have a 13 tick positive result, and then it climbs up. You catch a nice runner all the way up. So it's very possible that this would get you to positive. You just have to do the math and find out. And then you would quit with the positive result. But keeping it simple, we'll just say we're using one position just for the sake of this video. So we still need another winner, and the next trade is a short. And if we can get to target 2, that would be good for 27 ticks. And you can see it does come down and hit target 2. And so today's session required 3 trades to quit with a positive result. So that meets our requirement. We're able to quit positive with minimal trading. The size of the trade, well, at 5 cents, at $5 a tick, this one here was 19. Actually, this one here was 14. I mean, that's only $70 in risk per contract. On the losing trade, 19 ticks, that's $95. So, you know, very affordable. At $5 a tick and $50 a point, the Russell eMini meets that requirement for most people as well. You don't really need a large account to be able to trade the Russell eMini. What you want to figure is that the amount you're risking represents about 2% of your account. So you just have to do the math. So far, this is a look at just one session. Let's roll it back to some random point in time. We'll just go back to here, wherever that is, and let's just start clicking forward. In fact, let's go to the beginning of this session, and we'll look at a few sessions and see if we can quit positive. Ultimately, you want to look at, 100 sessions maybe. Look at the last contract, for example, 3 months worth of trades or a little more. The more the better, but you want to just make sure you're able to get enough trades, the trades are the right size, and that you can quit positive a majority of the time with a simple set of rules. So you can see right here, 931 gets short, risking 27 ticks, and that one comes down and hits target 2. So basically, we're hitting our goals, which is to quit positive. If we can get a target 2 winner, we're done for the session. So one and done. Let's go to the next session. All right, so there's a setup right here, but it's right before our start time, and it pops up too fast, and as a result, we avoid that trade. So now we're just waiting for the first trade of the day, and it comes right here, 934, and we make the adjustment on the entry to 1337.1, but it still triggers in, and it comes up, and it hits target 2, and again, our goals are met with just one trade, and we're moving on to the next session. So we're keeping track, of course, of winning and losing sessions. You want to make a column of wins and losses and break-evens and just chicken scratch it. 1, 2, 3, 4, cross. 1, 2, 3, 4, cross. And like this, you can quickly count winning and losing sessions. All right, so next session, waiting for our start time at 9:30. Here's 9:30 in here. Looks like the first trade of the day is right there at 9:33. 1342.8 is the entry, and that's going to come up and hit target 2. So far we've looked at 4 sessions, including today's session. Today's session took 3 trades. This is the 3rd session in a row, random session, where it was able to hit its goals on the very first trade. This is the kind of chart that is worth pursuing, so long as these results hold up. I mean, obviously, we've only looked at a few trades, a few sessions, but we're off to a really good start, aren't we? If this continues, if you test this enough, you look at 100 sessions, it might take you an hour or 2. It is information that's extremely valuable, will help boost your confidence. And then, of course, there are other things you can do to even flesh out a trade plan even further. But so far, you can see how effective this type of research can be for assessing if a chart or market is worth trading. It's quite simple, and you know, if you have tools that are right there in front of you, it makes a big difference. Like when we click on this trade, I can quickly see what my rewards are to each target, what my risk is, my risk-reward ratios, which are typically favorable, as well as a visual trailing stop if we want to count that. I mean, we can pretty much decide the style of trading that we want to assess in advance and have all the information right there, the entire trade. And of course, our spotlight trading technology, which shines a light on the trade with the use of these colors. You know, it's a pretty creative way to use colors that's built into this particular strategy that I've been developing. Thank you for your time, everybody. Hope you enjoyed this video. If you like this video and you found it helpful, please give me a big thumbs up and please subscribe to our video channel. That way you won't miss subsequent videos. I will be coming out with more videos. We'll be looking at more charts and more symbols and assessing them to see if they are worth your time in day trading. Thank you, everybody. This is TJ with Netpicks.com. Hope to see you again on the next video.